My name is Dmitriy Formichenko, and you're listening to Passive Real Estate Investor Show.
The views and opinions provided on this show are for informational purposes only and should not be misinterpreted as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, please go to passiveinvestorshow.com. Hey PI listeners, this is John Fortes. I'm making it a point to speak to as many investors as possible. My goal is to position myself to be a blessing to my network through conversation. How could one be a blessing through conversation? The easy answer is by listening. A simple conversation can open many opportunities and doors. I always ask myself this: what do I have to lose by having one more conversation? Going back to high school, I've connected friends and family in my network to one another, even if it didn't benefit me. And I continue those same principles and practices. Why? Because it's the right thing to do. If I can't help you, I probably know someone or something that can probably solve your problem. I'd love for you to become a part of that network. Go to www.johnfortes.com, create your investor profile, and schedule a call. How can I best serve you through conversation? In the words of Clarence the Angel from It's a Wonderful Life, no man is a failure who has friends.
And now, the Passive Investor Show. Here's your host, John Fortes.
Welcome, PI listeners, to the Passive Investor Show. I'm the Passive Investor Consultant, John Fortes, your host of the only ranked podcast for passive investors in multifamily syndications and real estate funds. Our goal and purpose of this show is to be a resource to investors and help them master their passive investments by beating inflation 1% at a time. My guest today is Dmitriy Formichenko. Dmitriy Formichenko is the founder and president of Sense Financial Services, LLC, a boutique financial firm specializing in self-directed retirement accounts and checkbook control. He began his career in financial planning and real estate investing in 2000. He owns multiple investment properties in various states and is a licensed California real estate broker. Over the years, he has taught hundreds of investment and financial planning seminars and has mentored thousands of investors. Dmitry, thank you and welcome to the show.
John, thank you so much. It's great to be here.
I appreciate you. Can you tell us about your background and how you got into creating your company, Sense Financial Services?
Sure. Yeah, it's pretty interesting and unique story. I'm actually, as you can hear from my accent, I am not from here. I am immigrant from Russia, moved in this beautiful country back in 1996. My background is actually in electromechanical engineering. That's what I went to school for back in Russia, and translated my degree here, and worked in the field for several years until I got laid off due to change in the economy and beginning of the 2000. And that kind of pushed me to go and explore something else. I actually ended up starting in a financial services field, just working with the conventional retirement accounts, just financial planning. And but prior to that, a couple of years prior to that, I was introduced to the idea of real estate investing through local real estate investment club, and I started slowly investing in real estate. And then as I was doing both investing in real estate and doing financial planning and retirement planning for my clients, I could see that real estate has a lot more potential. So eventually I had the opportunity to join a local real estate investment company in 2004, I believe. And I was doing that full time. And then when the market changed in 2009, many of our investors were not able to continue to buy because they maybe lost their jobs or ruined their credit, but they had money in retirement accounts. So I was actually given a task because of my background and my expertise in investing to start a department within a company, which I successfully did. And then about a year later in 2010, I went out on my own and started Sense Financial. So that's what we do now. Our specialty is helping our clients gain checkbook control over their retirement accounts so that they can invest in alternative assets.
That's pretty cool that you created the company or the department with it. You basically created your company within a department while working for another company and then went off and did it on your own.
Yeah. So, basically I was at the right place at the right time, and there was an opportunity. I jumped in it. So again, advice to your listeners, always be open-minded and look for the opportunities. Previous experience, and I kind of struggled in just being in the financial services because I was self-employed, and just building that business was difficult. But now looking back, I'm seeing that experience helped me so much in starting this business. So it was great.
That's pretty cool, man. Thank you, man. And much to your success too, man. Keep going, keep going. Now, with those products that you offer, what is the difference between a self-directed IRA and a self-directed solo 401k?
Yeah, so most people are aware of the self-directed IRA. You can open a self-directed custodial account, and you can invest in alternative assets using your IRA. But you do need a custodian for that. So basically, custodian acts as a middleman, and you have to go through the custodian for each transaction, whether you buying an investment, buying a property, or just simply making a payment, such as paying property tax and insurance for your investment. You always have to go through the custodian. A solo 401k, on the other hand, does not require a custodian, but this plan designed specifically for those people who are either self-employed or own a small business without full-time employees. So if you fit into that criteria, then you can set up your own individual 401k. That's another name for it. And this plan can also be self-directed, but it does not require a custodian. So you can actually invest using your own solo 401k trust, which is used as a vehicle to hold the plan assets. And as a trustee, you control it. So there is no middleman, there is no middle company. You're in direct control of your investments, and you literally have checkbook control because there is a checking account for your 401k, and you can write the check and make the investment. So the benefits of that is that you're avoiding the custodian. So all the delays and all the red tape associated with the custodian are eliminated, and also all the fees eliminated as well.
Are there contribution limits to each plan?
Yes, with an IRA, contribution limit is $6,500, and I'm sorry, $6,000. And if you're over 50, then additional catch up for $7,000. With the solo 401k, contribution limit is actually nearly 10 times higher. So it's up to $63,500 for this year. So if you're self-employed and making profit, you're always dealing with the problem of taxes. Well, this is a great tax shelter on top of other benefits that allows you to shelter significant portion of your income from taxes. Again, think about if you're able to drop your income by $60,000, how much difference it's going to make in your bottom line. And now, what if your husband and wife team working together in the business, then you can double that potentially. So sheltering over $100,000.
And what is the difference between investment returns and contributions?
Well, the investment returns, there is no limit how much money you can make inside of your retirement account. You've heard about Mitt Romney, former presidential candidate, and the talk about him having $20+ million in his Roth IRA. So it's physically and mathematically impossible to contribute that much into an IRA over one's lifetime. So, but he made some investments and with incredible returns, and as a result, that's the balance in his IRA. So there is no limit how much investment return you can make, but there is a limit on the contributions. So the contributions, again, can only be made from the earnings, and they're limited. There is a limit based on your earnings, but there is no limit on the investment returns that you can generate.
Speaking of investments, what are the most common type of investments?
Well, what I'm seeing with the self-directed IRA and 401k, most people, obviously, they want to get out of the stock market because the truth is that you and I, we cannot control that. We can control the stock market, and we can do certain things to maybe minimize the risk and increase the investment return, but ultimately we have no control. And I've seen during the 2007 crash, some people lost half of their portfolio. During beginning of the year, because of the pandemic, there was a significant drop in the market as well. I personally, I don't have much money in the market, but I've seen 30% drop. Thankfully, it came back, I think, because of the policies of our current president. It came back very quickly. I was really surprised. But that's the risk of investing in the market, that you can lose significant portion of it. There's really no hedge against that. But people want to do something else. And a lot of my clients, they invest in real estate or real estate related investment. And that can be just buying a single family rental property. That could be actually being a lender, private lender, and investing in trust deeds or mortgages. Some people buy tax liens. And some people invest in syndications. You can invest in multifamily syndication, self-storage, or mobile home park syndication. So basically, larger projects that are professionally managed by an expert, and you able to partner with them on that as a money partner. So a lot of it real estate investment related.
What is the most unique investment you've seen a client make?
One that comes to mind is I had one client that actually ended up purchasing basically a vacation rental in the, I forgot the country. It's one of those countries for people, I think South America, in South America, that people retire. Just escapes me, but actually written an article about that. But so they end up buying that property. They wanted to retire there, so they did the research and they basically decided on the location, and then ended up buying a property there. So they rent out as a vacation rental, week or a couple of weeks at the time, and they eventually want to convert that into a retirement home. Now, you cannot, because of the benefit, because of the rules, the IRS rules, you personally cannot benefit from the property or the investment while your retirement account owns it. But at the retirement, what you can do is you can actually take in-kind distribution. Basically, rather than taking a cash from your retirement account, you can take the property out, you can take the asset. That's what they're planning on doing, taking that property out as a distribution. That will be a taxable event. Property will have to be appraised, and at that time, now they own the property, they can move in it, and that will be their retirement home. So that's the plan.
Quick question. Would they be able to purchase it from the 401k?
No, absolutely not, because purchasing that will be considered a transaction between the plan and disqualified person, and IRS rules do not provide that. And maybe I should dive into that a little bit and talk about some of the limitations. The rules for the self-directed actually allows you to do pretty much any kind of investment. You can do whatever you want as far as investing in any type of asset, but there's a couple of limitations that you need to be aware of. And number one, you cannot invest in collectibles and life insurance contracts. So these are the only two investments that are not allowed. And number two, IRS rules prevent your IRA engaging in any transaction with disqualified person. And disqualified person is yourself, the account owner, your spouse, your kids, grandkids, and their spouses, your parents and grandparents. So basically immediate family member. Think about the vertical line. Okay, vertical line is a no-no. You can go horizontal, meaning your siblings, your nephew, your uncle, cousin, and so forth. You can enter into a transaction with those extended family members, but not immediate family members. And so any transaction that involves one of those family members will be considered prohibited. And so back to your question, buying a property from an IRA, that's a direct transaction between the qualified plan and the disqualified person. So that will be absolutely not allowed. That's why you cannot rent the property from your 401k or an IRA and live in it, even if you pay market rent, because you're receiving benefits, and that will be considered prohibited transaction. But good question.
That makes sense, and thank you for explaining that. It's just something that just popped in my mind when you were explaining that. I said, well, would they be able to buy it from their own account? So it just kind of made sense to ask that. Dmitry, what is the average rollover amount you see during account setup?
Well, for an IRAs, initially when I started this company, we were doing checkbook IRAs only. And I will see people, I'm not sure exactly what the average, but I've seen people bring in, $50,000 or as little as $50,000, a couple of $100,000. Maybe that will be maybe an average, couple of $100,000 and larger amounts. But once we added solo 401k to our services and started doing solo 401ks, now we have clients who start in from scratch. They don't have anything to roll over, but because they're self-employed or own a business, they can start a solo 401k and they can contribute $50,000 to $100,000 in a single year. So all of a sudden you've got a sizable amount that you can work with. And so for an IRA, yes, you do need to bring money in from existing retirement account, because the contribution limit being $6,000 is not going to take you far. So you have to have money in place to roll over from another retirement plan. But with the solo 401k, you can actually start from scratch, put 50, 100 grand in a year, double that in the next year. And you can do some pretty neat things with that.
What's the one piece of advice for the PI listeners?
Don't wait to invest. There is you can make money in any market, and obviously there's a lot of uncertainty now, and people are scared, but and that actually creates opportunities. So be open-minded and don't postpone. You got to start investing and planning for the future, and you want to do that as soon as possible. It's never too late. You might be thinking maybe you're at a certain age that it might be too late for you. Well, it's not. You can still do it, but get out there, start learning, start educating yourself, start investing in yourself, and do it.
Dmitry, thank you for coming on. And how can we stay in touch with you?
Well, the best way to find me, you can go to our website, which is sensefinancial.com. Sense is like common sense, SENSE, financial.com. You can find me on Facebook, on LinkedIn, and on Bigger Pockets. I'd love to connect with you. And I want to extend an offer to all of your listeners for a complimentary consultation. So if you want to chat with me one-on-one about your particular situation, obviously because of the limited time, we can't address all possible questions and aspects of the self-directed IRA or 401k, but we'll be happy to chat with you one-on-one.
Yeah, reach out to him, learn more. He's very knowledgeable, and thank you for coming on the show, Dmitry. One more question. Is there a meaning behind the company name?
Well, there is a meaning. It's we're talking about financial concepts that make sense. So that's really the meaning. It does make sense to have more control rather than less control. It does make sense to invest in something that provides better potential for potential for a better return. So that's really the meaning.
Thank you for sharing, Dmitry. Thank you for coming on the show again. I'm very grateful to have you on. I appreciate you.
John, it's great to be here. Thanks for having me.
Yeah. PI listeners, thank you for listening. Don't forget to download your free copy of the investment tracker. It allows you to track up to 5 investments, compare sponsors, markets, and most importantly, projected versus actual returns. To get your copy, go to www.projectedreturns.com. PI listeners, thank you for listening. As always, we hope this was the best resource for your investment strategy, but also the best use of your time. Remember, if this episode helps you, you can help us by leaving a review on iTunes. I hope you feel compelled enough to share it with someone you think this would resonate with as well. As much as it pains us to leave you, but you know what time it is. Time to go put this into practice. Till the next time we meet, happy investing. PI listeners, I'm grateful for your time and I appreciate you for listening. It would mean the world to me if you went to iTunes and left a rating and written review. Let me know how you feel about the show. It really makes a big difference with getting the podcast out there. Don't forget about our Facebook group, where all of our guests are members of. I'll be there to answer any of your questions, or even questions you might have for future guests. Subscribe so you can get the latest episodes and our fan favorite quick hitters. Finally, I want to keep you updated, so head over to johnfortes.com and sign up for the newsletter. If you're interested in partnering with me, sign up on the contact page so you can talk to me directly. I look forward to connecting with you. Happy investing.